Hey guys, how's everybody doing? Appreciate y'all for being here. Let's take a look at the market. It's 11:42 on the East Coast, 10:42 in the Central Time Zone. Boy, the market is just melting up today. Look at that. We've taken this higher trading range. We've been looking at this higher trading range. So now we've established call it 5670. So 56, we're in a new trading range between, at least for now, between 5,600 and 5,700. So we'll see now. Now I'm saying a person probably, let me show you where the next dip buy is. The last dip buy was in this blue box, and we didn't quite get there. So I'm going to say this dip buy is that's where I'm putting the dip buy box. So we didn't quite get to my last one, but anyway, that's where I would expect buyers to be on a test, at least the first time. All right, so let's look at SPY. Look at SPY outside of their darn Bollinger Bands. I love that. Now, by the time something's got outside of their Bollinger Bands, a large part of the move's already happened. I mean, heck. So, but the whole theory of being outside of your Bollinger Bands is sometimes that's where a momentum move starts. And like over here, we were outside of the Bollinger Bands, and then the next day we freaking fell off the side of the cliff. When you're outside the Bollinger Bands, one of two things happens. It's either a fake out, you correct, and you come back inside and usually slam back the other direction. Or it's not a fake out, in which case you start melting up. So, but what I'm looking at, on the SPY, this is important to take back this area. We've been looking at this 560 area forever. I've been saying the bulls want to take that back. Let's look here at the daily. Let's pull up the daily real quick and see where the 200 period moving average is. That's going to be the next, gosh darn it, you got to be kidding me. That is going to be the next big test. All right, and I'm also going to give you another, let's check this out. This is a good dip buy. It's basically the same one I gave you on the ES. ES is S&P 500 futures. They trade 24 hours, but the pullback box I gave you on that is roughly at the same spot this one is. Just where I'd expect buyers to be. It's just a bullish gap. And it's especially bullish, or it's only bullish if it stays open till the end of the day. I'm assuming this stays open. If for some reason what bears really want to do is close this gap and close the market on the other side of that. If that's the case, I'll come turn this area to orange. But for right now, it's blue. And we might just melt up all the way to 570, right back to that, right back to the 200 period moving average. All right. Well, anyway, let's look at some other stuff. I'm glad the market's doing all right. In Discord Exponential, I had a question about SVOL. We're going to get to that in a second. I haven't even checked my model portfolio. Let's see how it's doing. It should be doing pretty good. I'm sure I'm underperforming because I have 15% of that darn short fund that hurts me on bullish days, but it helps me on bearish days. All right. Well, this is kind of a hard to understand graph, but I'm kind of liking it now. So this is all the stuff I have in their contribution to my bottom line today. GPTY is making me 66 basis points. GDXY is costing me 66 basis points. Okay. Misty is making me 4 basis points. ULTY, good job, ULTY, making me 44 basis points. Great job, ULTY. XOMO making 3. TLTW bringing up the rear. Well, Oh, and then I have Y triple Q cost to me 24 basis points. So all of those together, I need to put a line here. All of those together average. Oh, and Y SPY. Y SPY's costing me 6 basis points. All of those together fall through to the bottom line, which is Max's model, which means I'm up 21 cents right now. Now, unfortunately, the SPY's up $1.34 or 134 basis points, 1.34%. Okay, and even a 60-40 portfolio is beating me, but it's early. So let's look. I mean, everything's doing so great. Let's just look at ULTY. I wonder if everything's up. We'll just look at the top 10 positions. So ULTY itself is up half a basis point. Nice job. Look at ULTY over the 20-period moving average. You don't see that very often, and it's only 8% away from the 50-period moving average. So it is definitely showing some short-term momentum. The top 10 positions right here. Planeteer, triple leverage Qs. They're up to Tesla. Everything's up today. NVIDIA, Carvana, Robinhood, HIMS, and Upstart. All right, everything looks pretty good in ULTY world. Let's look at I was going to check the GPTY verse. Maybe it's not here. There it is, GPTY verse. There we go. I was going to say that can't be right. So here we have it. Well, that's looking good. We'd like to see that. Everything's up. It's a clean sweep, with the exception of Hood and Melly and NU. All right, great job, LF, or that's LFGY. Great job, LFGY. Let's look at GPTY. I never did rebalance my portfolio yet. I just remembered it now. I need to do that. I was supposed to do it yesterday. I'm behind right now on stuff I'm supposed to do. All right. Well, this one looks great. Other than Qualcomm, they obviously missed earnings, and thank God it wasn't one of the three legs that I put out there. I think all the 3 legs I put out there worked this week, or we'll look at them in a second. But anyway, it's just, except for the hedge. The hedge trade lost money, but it was designed to lose money. But the bullish trades are looking good right now. All right, we'll get to the option stuff in a second. So that's let's look at Chippy. That's GPTY. It's going to be the same thing no matter where we go. Everything's going to be up. There's Chippy. Qualcomm's down, of course. We already talked about that. All right, let's look at the index buffer. Yeah, look at that SVOL up 4.2%. That's why Exponential was talking about SVOL in Twitter this morning, or not Twitter, in Discord. It's having a heck of a day, isn't it? But you guys know last week when SVOL and ZVOL, whenever the market's under stress, those funds get hit worse than the other normal funds. I mean, they just do. They just do. The counter to that is, and we're seeing it today, they recover whenever vol's getting crushed the other way. They recover. SVOL used to be a pure volatility selling fund. They used to short volatility by selling futures and then hedging it with options. But they switched their perspectives 6 months ago or something, and they're now a fund of funds. And they we'll look in a second. But yeah, they've changed their methodology. Anyway, it's working out today. It is working out today. So who's down? YSPY. What is YSPY doing down? And YSPY probably, did they pay a dividend or something? I mean, YSPY's not supposed to be down. Come on, YSPY. You're selling triple leveraged puts. We should be killing it today. All right, let's see what's going on with YSPY. Y-SPY's up 100 basis points, up 1%. Nice job. Nice job. I was seeing if maybe Y-SPY paid a dividend and maybe it went X today or something. And they might have, because that's probably what happened, because the last time they paid a dividend was on the 28th of March. I wouldn't be surprised if they've gone X or something. I guess I could look at my Tasty Trade account. Anyway, it's just on drip. It'll drip right back in. All right. Well, speaking of my Tasty Trade account, I wonder if it's smart to even put LFGY in there. But oh my gosh, I don't know. If you guys have any opinions on it, we can talk about it when we start chatting. All right. Let's look at some. What do you guys want to look at? All right, Grateful Trader, I appreciate you being here. Okay, we'll look at all those. For sure. Brandon, nice job into ULTY. All right. Hey, Mark. Okay. We'll take this question first. No, but that's something else I need to do today. I'm going to email Jay. It's May. I remember when they filed that, I put it in my head that it's May is when it's, because they have like 90 days or something. I just remember the May's the date. So I'm going to send him something and see if I can get something set up, maybe for the day it comes out or the week it comes out. Maybe for the week it comes out, so it can trade for a few days, and I'll make content on it, and then we can ask Jay about it. I'm really excited about and I really forget what the strategy is, but it's a more exotic strategy. It's called a lightning spread, and it's stock plus a short put spread. It's an interesting idea, and I back tested it a lot whenever it came out, and it back tests really well, and anyway, all right. Well, let's look at some of these option trades. Then I'll take those. Let's just look real quick at these earnings trades, and then I'll take those questions. Because if you have these on, it's time to take these off. If people have been following me into any of these trades, take them off. It's a winner. I didn't give out MicroStrategies, but anyway, but the ones I gave out are SoFi, PayPal, Starbucks. They're all up. But then I also gave out this right here, SPY, and it's down $154. So on the ones I gave out, that's 190, it's 250 in profit and 150 loss, so $100. And if I could just do that every week, $100 per contract. Now this one, yeah, but I would just take those off, and let's look for something for next week. We do have earnings after the bell. You could if you did those, let's take all those off. Take your profit, but maybe we'll look at something after the bell today. Is Apple today? And Apple and Amazon, those are after the bell today, right? I'd be tempted to take that Amazon off too if they haven't declared yet, and you're already up $338. It's been a good week for earnings. As soon as I get out of here, I'm going to go take my trades off, and I'm going to decide about doing something else today. But I'm fine with the 100 a contract. I want to make 100 a contract every week. That's all. I'm fine with having a hedge trade that loses $100, and then bullish trades to make 200. In fact, that's kind of what I'm trying to do. Because the thing is, in a down market, you have half your loss paid for. And really, because of leverage, sometimes in the down markets, you can even make money like I did back in April. Anyway, all right, guys, let's talk about whatever you guys want to talk about. I'll go take Ethan's questions. QUP and QDWN. Now, in case anyone's watching, I want to reiterate that you don't have to wait for me to evaluate. I appreciate that you guys like to hear. Okay, I already tell I like this just by the name of it. I already tell you, I love it just by the freaking name of it. Good job, Ethan. If my company was big enough, Ethan's the first person I would hire. Or he has better stuff to do with his life, but I would pay him a consulting fee to dig up stuff for me. He's good at digging up these things. You're going to be my employee number one if Maximum Media grows. Anyway, and I do have plans. I'm going to open. I have some plans to hopefully make it grow. So anyway, all right. I don't even know what to say. We're going to have to look at the prospectus on this. But look, daily Delta Q100 upside option strategy. So this tells me it's NASDAQ, and it probably buys freaking calls in the NASDAQ. It just makes extra upsides, or let's see right here. So they have 94% US dollar broker, so they keep all their money in cash, and then they use some kind of leverage. They have a tenth of their money in a call, and then they have it hedged somewhere. They probably have a long call and then a short, and then short futures. Or I don't know, but we'll get in the middle of that. Anyway, that's really interesting. Good eye on that one. So what was the other one called? It was called Q down, I think, right? QW, and it's probably the opposite. All right, yeah. Oh my gosh. All right, well, we need to look at the prospectus. Somebody put the prospectus in Discord, and I'll take a look at it. Or I need to do that. I'll go take a look at it because I need to take a look at the company's website. I've never even heard of the freaking company. I guess we'll just check it out real quick. Well, let's see how new it is. It doesn't bleeding assets under management. It's only has $250,000 assets under management. It's brand new. So, I mean, all the, after I do I'll do a review on it today, and then a bunch of you guys will buy it, and people that watch the review will buy it, and we'll see how it goes up. Anyway, all right. So, but yeah, good eye. You could be employee number one. Okay. So yeah. Okay. So I personally don't want the credits. I like puts going down less on red days. Yeah. And the credit spread would stop that. I mean, it would anyway, plus the yield would be a significant drop. Yeah. No, I just made a video lately. I don't know if you've seen it. And I'm making another one today. But it's about triple QI. You just have to watch the video, but I'm covering all that same stuff, and I cover that all the time. Anyway, no, I hear you understand how to use them. So, but if a person is ultra concerned, maybe it's a younger person and they don't need the yield. If a person is ultra concerned about it, you can get SpyT or even XPay, or there's funds that do have more potential upside. So, but if you really want the yield and you like the little buffer you get on the downside, yeah, that's the fund. All right. Well, let's see what else we got. Yeah, Alti's the goat. So anyway, yeah, I'm not saying I'm gonna get it. I don't know about it, but I probably will. It looks really interesting to me, but I'm gonna have to sacrifice something else. I'm gonna look at it whenever it comes out, and I could put it in the spot where YSpy is now. I like to have a little, I don't know, but now I'm going to need some of this one. No, this one's not going to work for my brother-in-law's account because we aren't trying to, this is for growth. We aren't, he has a growth plan, and he already is working with people that have his growth outlook. Fine. We're just trying to do a little dividend snowball. He's like all these, my brother-in-law's just like these people you see on YouTube and stuff. He started figuring, well, heck, if this thing pays 50%, and he didn't really understand the difference between yield and return at first, but he's like, if this pays 50%, won't it be paid off in 2 years and then free money? So I had to explain it to him. I was like, yeah, not exactly, but it might be paid off in 4 or 5 years in free money. I mean, going at the rate it is now. So, I mean, no guarantees, but it's an interesting strategy. And he's the reason he's doing it is he's looking to replace he has rental property, but he doesn't like having to collect. He doesn't make that much. And he's thinking about reallocating money out of rental property and into into one of these plans in a big way. He just gave me a little bit of money for proof of concept, but we're thinking about doing it in a big way. So anyway, but but I have to use yielding stuff. It doesn't, I have to use yielding stuff anyway, and that's fine. So that's fine. All right. Well, I think there were some other ones that you guys wanted me to check on. If there is, I'll check on them. Is anyone going to do Apple and Amazon? Does anyone have any Apple or Amazon trades on? And if so, would you like me to show you how to buy? Or let's do this. Let's do a pairs trade today. If there's no other questions from you guys. On maintenance, I don't use margin, so I don't know, Grateful Trader. Hopefully somebody will answer we'll answer that. Okay, so let's do like let's see if we 1 day pairs trade's viable. What do you guys think, Apple or Amazon? I'm just going to choose one. All that matters to me is which one's more liquid. I know I've already done these, but these are already up. We'll pretend like we'll do a new one. Okay, so let's do Apple. I just like Apple. But I don't know. Amazon has tons of liquidity. We'll do Amazon because it came up. It's karma. Okay. Yeah, this thing is just liquid all day. I mean, look at these options. You can look at all this risk for this little amount of reward. Anyway, we got a 5.7% buffer. Hang out. I'll do this just really quick because there's a point to this. There is a point. All right, now that is a decent looking trade, risking 1,700. But you could just do these kinds of trades because Amazon's so liquid. Let's try to move it out a little further. 121. That's not enough income for me. Let's check this out. 153 on 1,800. All right, well, let's just do it like this. $200. Take your wife to dinner at Chili's or whatever. Outback. Go to Outback. And then hopefully tomorrow, if Apple has good earnings and makes a 2 standard deviation move, you make 1,600. But that very rarely happens. But what really you hope happens is it just doesn't go down more than 5% and you just hang on to this $200. All right. But what I was going to say, here's my point. So right here, if you did this one, you'd have 1,300 at risk. Okay, let's save this trade. I'll put it in the comments. Then I'm going to show you how to hedge it. Save this. Save, and then wait, I'm going to copy link. Yeah. Okay. So here's this one. But I was a good Grateful Trader on those funds this morning. I would have found them eventually, but you find stuff so fast. Anyway, I really appreciate you bringing those to my attention. Those could be right up my alley. Like I say, I'm not going to go out and buy them, but what I'm excited about is that it's all that I could get it if I wanted to. I'm excited there's so many out, but I'm not going to go out and get an extra upside. I don't need extra upside. I might get the extra downside one next time we think the market's going down, depending on how it's structured. That the extra downside one could have real utility. Okay, here I'm weaving. I'm sorry about that. So hey, Retire, what's up? We're doing a pairs trade right here. We're doing an Amazon. It's an Amazon spread, but we're gonna risk about $1,300. But the only thing that we think is going to mess us over on the Amazon spread is if something happens and the whole market goes down. So we can't hedge really bad news from Amazon, but we can try to hedge out bad news from the market. So we're going to do a little diagonal put spread. We aren't going to worry about a little down move in the market. We're just going to worry about a 2 standard deviation move. So we're going to look at deltas. We're going to sell a put and buy a put. The put we're selling is going to be about a 5 delta. Okay, so that means 95% of the time the price isn't even going to get down there. It's way out of the money. We might even go for like a 3. Yeah. a 3 delta. Then the put we're going to buy is in the week behind it. Or I'm sorry, yeah, the week behind it. And we're going to buy 2 of those. This is called a ratio diagonal. It makes it long volatility. Okay, now it's $100 risk. If it doesn't happen, we're probably going to lose $100. But if for some reason the market drops, especially if volatility pops, which we expect it to, and we do have a 2 standard deviation move, this little $118 trade, you could cash this in for a 10x if we get the 2 standard deviation move. And that's going to come in real handy, because guess what? The other one has $1,700 worth of risk. So what we would do if we did both of these together is we're making a bullish bet on Amazon for earnings, but we're hedging out a market move. And we can win both sides too. It's possible Amazon hits their earnings, and then for some reason, there's a tweet that comes out and this goes down, and you can take this off for money too. Anyway, so let me save this one, and this is the hedge trade. It goes with that. It goes with that Amazon. Oh shit! Hang on. My bad. I guess you could do that. That's hedging at Amazon. I didn't even think about that. I wanted to do it in the Qs, and it's going to be really okay. So, but same thing happens. Go down here to the 2. Okay, there we go. 2 delta. Sell the 2 delta. All right. Yeah, but same, if we get a big move from the market, this one, I just don't like the looks of that one. We'll go back to the original plan. It was just an accident, but sometimes accidents are happy accidents. I guess we'll just do a pair trade with Amazon. This probably isn't smart. I'm just doing it because I want to see how it works out. Let's see if we can hedge Amazon with Amazon. I mean, and this will only hedge against a gigantic miss. But it's only $44 to do it. Yeah, so that's our pairs trade. That's our pairs trade right there. So this is we'll put it in here. Pairs trade with Amazon 3-leg risk reversal. Okay, I'm going to save this and send it to you guys. Sorry about the confusion there, but actually that was like a happy accident. Hedge it with itself. I do like to hedge with Q lots of times, but today I just like the math of this one better. Q's too expensive for 1 day's worth of insurance. I was looking, and that was going to cost $200 or something. So that's what this one's more, this one will work, and it's only going to stop at 2 standard deviation move. If Amazon misses and they just move down a little bit, yeah, it won't, this won't help us. But if Amazon just moves down a little bit, we make the $200 on the income on the other side, right? And lose the $44, $150 winner. I do that all day long. $150 per contract. Sure. And then if Amazon misses, we're fine too. We might even be rooting for Amazon to miss. Not really, but you're just hoping you would get your money back. So anyway, all right. Did I put that in one? Let's see. I don't think I posted that in there. Save as new trade. But I'm trying to show you guys how to do this. So now that you've seen what I told you the deltas, I'm showing you the methodology. You can do this stuff too. These ratio diagonals these far out of the money put ratio diagonals make interesting hedges, but it's not a secret. I'm telling you exactly how to do it. Anyway, copy. Okay, so it's copied. All right, let me send this back there. But anyway, Retire. I appreciate Retire still here. I doubt he is, but I appreciate you for being here. Okay, what's this one? Let's look at this one. Oh, Nancy and GOP. Yeah. I talked to Mike about those. I don't know on any good copper funds. Let's do KP or CPRX. Is that what it was? CPRX. Oh, it's right here. Gosh darn it. Yeah. Oh, CPXR. Gosh darn it. CPXR. All right. I was just going to look at, sometimes it says peers, and I was just going to look at the peers, but they don't have any peers on this one. But we could go to finance charts, usually has peers, or stock analysis. But yeah, I'm sure there's other copper funds. These guys are leveraged copper. They're shorting 200%, so they're long leverage copper. It looks like they're double long in copper. I would imagine that without doing the prospectus, I'm not really that interested in copper funds myself. Maybe I should be. It only has $528,000 under management. Okay, I'm a lot more interested in those other ones you showed me than this one. But yeah, on Nancy and stuff, I think those are a gimmick. I mean, you guys don't even want to get me started on those, but I mean, I think they're good. I mean, if you like them, go for it. It just, I would use it. Maybe Nancy would be a good, where you might use a growth fund. I mean, let's just pull it up, because it just buys good stock. The thing is, Congress and Senate, and it just aggregates their buys. It's not like the second Nancy Pelosi buys, you get a message and you buy the same call. And no, it's not like that. They have to file, and they have 90 days to file. And then they take the filings and they aggregate them, and they see what the senators are buying the most. Well, guess what? The senators buy NVIDIA and Amazon and Apple, just like you, because that's where the money is. I mean, so I don't see any value. It's just paying another fund to buy Amazon, Apple, and NVIDIA. Or I haven't, and when I've looked into it, I haven't seen any value. Not that there's anything wrong with Amazon, Apple, and NVIDIA. And sometimes, the senators might know something. My point is, the delay is too slow for it to be of use. It's, I mean, it might be, you could look at it as a confirming indicator. Okay, well, the stock I like, well, I like it if it's on the senators list also. I mean, yeah, for a confirming indicator or something, but I'm not, I mean, and the other thing is, though, here's the other thing. The senators and congressmen don't know anything. The market's random. It doesn't even, they think they do. And and I agree it's unfair. I agree they could know something, but they don't know anything. I mean, my God, in the internet, it's just another, I mean, it's one of the worst examples of when I say everything on the internet's wrong, and usually, or when there's a consensus, and usually the opposite is correct. And that's how it is with high yield funds. And that's what my video is about today. One note, if you're still here, you guys will really like this video that I'm doing today. But I'm kind of looking at Victoria's video. Victoria had a video from yesterday, and I'm kind of reviewing it, and I'm showing you where her fallacy is. It's not her. I don't have a problem with her. It's just big influencers in general. They're all bought and paid for. They don't want you to know the truth, right? Look at that slide. They don't want you to know the truth. Is Dan here? Dan's going to love this video. All right. I'm sorry, I weaved out of my lane. What were we talking about? I was trying to look up something on FinViz, and it took forever to come up. I guess it was just, oh yeah, Nancy. Let's just pull up. I was going to pull up Nancy and see how it's been doing. I don't have a problem with it. I mean, but it's, I think there's a lot more edge in a fund like YSPY or QDTE or something that sells options on the NASDAQ and brings in all that juicy income. FEPI, just pick one. I think there's more edge in any random YMAX than there is by knowing what the congressmen and senators are doing. I don't see the value in it. Now it's teach his own though. So let's look what the biggest holdings are. Okay, 11% NVIDIA. Well, thanks for nothing, congressmen and senators, right? And then what else they have? They have AI. Well, AI is a 9%. Here's the way you could look at it. You could say in the SPY, AI is only represented, the C3 AI is probably 1 or 2%. And it's a 9% allocation here. So you could say, okay, well, Congress and Senate have a larger allocation of AI. So maybe they know something about it. So I guess I'm talking myself into it. So maybe I could see some value in it. But I mean, look, they're buying, look, Apple, Microsoft, AMD, Snowflake. I mean, I don't know. I mean, I just don't think there's a lot of edge in it, but there's nothing wrong with it. I mean, let's see how it's done the past year. Should have done pretty well in those stocks. Sorry, I clicked on something. But yeah, like I would be all about it if it was instant. If like they posted and then like the next day or with that same week that it updated. But I asked Mike, well, it's in their prospectus, but when Mike was on my show, we talked about it, and they aggregate the biggest picks. So I mean, it's a strategy. Okay, but now let's kind of take a look at it. Performance year to date down 4%. That's about right. I mean, performance for the past year up 10%. So, and that is just NAV. That's not dividends included, but you can see over here, it doesn't really pay a dividend. It paid 8 cents all year. So, and what was the Republican version was Cruise or no? It used to be Cruz, not like Ted Cruz. It's a standard bearer of the Republican Party. I mean, Defiance Hotel. No, that's Defiance. Well, I don't know what the Republican one is, but like I say, I'm not really that interested in it unless you guys are, unless you guys can make a case. But I do like to talk about it. I'm glad you guys asked me because, all I'm saying is if I had $1 for every time I heard that Warren Buffett had sold his whole portfolio or Bill Gates is out and, I've been hearing that for years or whatever. I mean, if these guys were really out and short as much as, the internet said they were, they'd be broke by now. It's just, I mean, that type of information to me is not useful. It's not useful at all. I'll give you a story. 2021, the day before New Year's Eve, somebody or maybe it's not even that, but sometime in January, it's all over Twitter that Pelosi sold Google. They're out of Google, or they sold a large amount, hundreds of thousands of dollars worth. And my friend was telling me, they know something. It's cheating because they know something because they're making the laws. And I said, no, they don't know anything, and even though they try to make the laws, I mean, we have some checks and balances, and they can't just do whatever they want and everything. Well, anyway, well, sure. And then I told my friend, I said, hey, and the other thing is it's the last day of the year. It's tax loss harvesting. And it was actually the last day of the year. We can look it up. It was actually the last day of the year 2022. That's exactly when it was. And it was tax loss. And they sold a bunch of Google. But that was like at night time to buy. And I had my friend telling me, no, he just thinks it's unfair that the congressmen and senators know all this stuff. And and the thing is, if you went against most of these trades, you would do. But also because of the reporting requirements, by the time they report it, it's too late to act on it. So what in the heck is going on? I have the Wi-Fi router right here. It's freaking plugged in. I mean, the Wi-Fi is slow, but it's probably checking on your end too. So maybe I should stop the pod. Stop the pod. I mean, I can't even get back to see you guys. So I'm assuming that you guys aren't having a good experience. See. All right, guys. See ya.